What's going on, guys? Benny Childs, founder of the Teach Me to Fish Effects Trading and Investing Community, back with another video. This is going to be our daily analysis update for the week. All right, and we're going to start out with the Nasdaq futures in Q1 chart. Now, looking here on the weekly, what is this popping up? Oh, all right, so looking here on the weekly, guys, we have already moved into discount. So it is very possible, okay, it's very possible that we could start to see some movement up. However, I don't think that is going to necessarily be the case. I think that we will eventually get down to $18,425.50, which is the proximal line of this fair value gap right here. All right, so our initial weekly draw on liquidity of $18,883.25 has already been hit. Okay, so, and we see that we are reacting off of the 62% retracement. Let's see, if we look over to the left, we can see that we are also reacting off of a weekly breaker. Okay, right here would be the weekly breaker. We'll just call this a breaker, not a unicorn. Okay, we can see that we are reacting off of that weekly breaker that starts at 18,969 flat and ends at $18,313.25. So and we are in discount, so it is very possible that we could start to see the market go up. But again, I think we're going to get a deeper retracement in the tech stocks. But again, remember, we're already in discount. We've already tapped into a discounted PD array, and it's very possible that we could continue up. Let's take a look at this here on the daily. Okay, so we had, and I don't think I marked this out, but we had let's see, so we had Monday's candle to sweep Friday's high and close below, so therefore we would have been looking for Monday's low to be the draw on liquidity for today, and we can see that obviously today hit it. All right, and so the today's candle closed below Monday's low, so therefore I'm looking for tomorrow, Wednesday, to expand lower, and I'll be looking for at least $18,725 flat to be the draw on liquidity there. So we'll see how that that portrays, or how that is carried out, because again, we are in discount of the weekly dealing range, and we could start to see some upside. You know, we may get a reaction off of it, pushing it up just a little bit, and we may come into this order block right here on the daily. All right, and I will annotate that for you guys so you can get a visual. So it'll be this order block right here, or supply area for my supply and demand family. So we could see a push back up into there, and maybe get pushed back down at least to the $18,425.50 mark, again, which is the proximal line of that fair value gap. Okay, but nonetheless, here on NQ futures, I'm looking for $18,725 to be the draw on liquidity, looking for that to get hit tomorrow. All right, let's move along to ES. Okay, this is the chart that I've mainly been doing my analysis on, you know, just because of, you know, the whole stock market, you know, craze and frenzy that's, you know, in the news right now. So let's take a look and see what we have going on. All right, so the weekly draw on liquidity that I initially had has not been hit. All right, we came very close to it. All right, at $5,433 flat. But that weekly draw on liquidity that I had marked out is $5,432.50. So we came very, very close. And when we get down to the daily, we'll see if it was Monday or Tuesday that came close. But we came very, very close, about 50 cents off, all right, 2 ticks, off from meeting that goal at the early part of the week. But when we take a look here down at the daily, okay, we take a look here at the daily, and I'm gonna just go ahead and get rid of this one here. All right, we take a look down here at the daily, and we can see that today is when we almost hit that. We were just 2 ticks off, right? 50 cent off from hitting that weekly draw on liquidity. But nonetheless, today, Tuesday's candle, it closed below Monday's, right? Or let me back up. We see that Monday's candle swept Friday's high and closed below the high. So I had $5,481 flat as the draw on liquidity for today, and we can see that that was hit on today. And today's candle, which is Tuesday, all right, July 30th, it closed below Monday's low. So I'm looking for Wednesday's candle to expand down at least to $5,433 flat, and I'm hoping that it just goes ahead and hit that weekly target while it's down there. But this fair value gap, is that a daily fair value gap? No, that's a weekly fair value gap. So yeah, so far, according to the weekly chart, the consequent encroachment of the fair value gap so far has been respected. So it is very possible that we could see higher pricing on the ES1 chart, which is the S&P 500 futures. That so far has been respected. Now when we come down here to the daily, let's see if there is a fair value gap. So there is a fair value gap here on the daily, and I will annotate that for you guys. I'm going to annotate that with
new text message from 22,369.
Man, I got texts coming in like crazy. If we come here, all right, and let's make this a fair value gap, okay, we can see that here on the daily, that daily fair value gap, the consequent encroachment has been closed through. All right, so the daily is not respecting this fair value gap, which could lead to the weekly not respecting it. Okay, so I am still pretty bearish here on ES1 futures, and again, I think that ES1 futures, based on the dealing range, which somehow got moved, let me unlock that and reposition this. Let's lock that back. All right, I could definitely see it coming down to $5,011.75 to put us in discount to to head to the upside. All right, so that means that another market crash or whatever, a pullback, but that's fine in and within itself. We just dollar cost average, right, on our bearish weeks and bearish days, right? So again, I'm expecting Wednesday's candle here on ES1 to come down to at least $5,433 flat, and a weekly draw on liquidity of $5,432.50. Okay, All right, we're gonna move along. Let's take a look at the Dow. Let's see how the Dow's been doing. All right, let's go to the weekly. I don't think I did a weekly analysis for you guys here in a long time. So I think here on the Dow, we could possibly see it come down to discount at $39,770. It's going to take some work, but hey, the right news event or whatever narrative that is put out there can definitely take us down that way. I had this week's draw on liquidity at $40,959, which has been hit. All right. I also had the consequent encroachment of this wick at $41,117 as a possible draw on liquidity. We came pretty close to it. We have not hit it. So it's very possible that we could get a push up. We do have non-farm payroll coming out, which if that is positive, typically that causes the stock market to go down a little bit, all right? Because the dollar is the contrarian to our stock charts, okay? So that typically is how that works. Positive news, stock market goes down a little bit. Negative news, stock market goes up a little bit, okay? So that's YM1, the Dow Jones futures on the weekly. Here on the daily, what did we see? All right, so with Friday, let's say Monday's candle, it swept Friday's high, right, and closed below the high. So I was expecting $40,606 to be the draw on liquidity for today. We came pretty close, but we did not hit that. But today's candle, Tuesday's candle, it did sweep Monday's high and it closed below. So therefore, I'm expecting Wednesday's candle to be a bearish expanding candle. All right, so my draw on liquidity for Wednesday is going to be $40,647. Okay, and hopefully while we're down there, we'll go ahead and hit Monday's target of $40,606. Okay, which when we look here on the daily, we're not too far from 39,770, which would be the discount here on the weekly. Now, what did we do this week? We did trade up into this daily fair value gap. Okay, all right, and that was respected. Here, let me just clean this up a little bit so we know exactly what it is that we're looking at. And this would be a SIBI. All right, I'm going to unlock that so you guys can see that better. Okay, bam, bam. Okay, all right, let's go ahead and unlock that now. All right, so, and we are respecting this daily fair value gap. All right, so I definitely can see Wednesday's candle expanding to the downside, and we also have a daily volume imbalance that could act as a draw on liquidity to get us close to the discount area of $39,770. All right, that's Dow. Let's take a look at the Russell. It's the same thing for the Russell, pretty much my technical analysis. All right, so here on the Russell, we can see that where is it? Here. The week before last, all right, so that candle closed above the prior week's high. So I had $2,304.90 as the draw on liquidity for last week. All right, last week did not hit that, so therefore I had last week's high as the draw on liquidity for this week, which was at $2,288.80. And we can see that we have already tapped into that here on the weekly for the Russell. Let's take a look at the daily. All right, we can see that Monday's candle Here, let's do it like this. We can see that Friday's candle closed above Thursday's high. So for Monday, I would have Friday's high as the draw on liquidity. All right, and you guys can see that Monday's candle did sweep that high and close below it. So therefore, for Tuesday, I had to draw on liquidity for $2,000, 240, excuse me, for $2,241.20, which we did sweep that, right, and we closed above it. So therefore, I'm expecting Wednesday's candle to go ahead and expand to the upside to reach towards $2,278.50. All right, and I'm thinking while we're up there, we also have Monday's high as a liquidity point, as well as the weekly draw on liquidity that I had for the Russell that was never hit, to the prior week. So we could go ahead and see that hit, and then maybe we can see this move down into discount, which would be $2,121.30. So we'll see how that works out. Okay. The next I want to talk about is NVIDIA. I posted a video and I told you guys that, hey, I believe that NVIDIA will go down to at least $90. That will put us in discount for the weekly dealing range. Okay, and you guys can see that we're moving right down towards it. All right, so for this week I had the draw on liquidity at $106.30, and we can see that has already been hit. I'm gonna get rid of that. All right, and I'm gonna mark that as being hit. All right, so this week's target has already been hit, and we're just reaching further down the charts. We take a look here at the daily. We can see that, let's back this up. We're gonna back this up to Thursday of last week. Thursday's candle closed below Wednesday's low. So for Monday, I was expecting it to come down to 106.30, which that had not taken place yet. Okay, but we see that where is that? We see that Monday's candle came close to closing below Friday's low, and so therefore for today I had the draw on liquidity being 111.30 for Tuesday, and we can see that was already hit. And since Tuesday's candle has closed below Monday's low, I'm expecting Wednesday to expand bearishly down to at least $102.54. All right, making its way towards that $90 discount mark that I'm hoping NVIDIA gets to. And last but not least, another one that I follow a lot. Yeah, you guys see me with DJT. I'm following that as well. But let's take a look at the MAGs, right? The Magnificent 7 ETF. All right. So when we take a look here at the weekly, I had the draw on liquidity for the weekly to be $42.82. All right, we are moving down towards that way. However, we have since kind of retracted back up, kind of still respecting this weekly fair value gap that I will annotate for you guys. All right, that is this weekly fair value gap here. Let's go ahead and weekly, that would be a BISI. All right, so we are respecting it, right? This week is sitting below the consequent encroachment of that, and so we're gonna have to wait until the close of Friday's bell to find out if that consequent encroachment of the weekly gap is going to be disrespected, and if so, I believe again that we're going to move closer into discount to $42.60, which we would love. And we do have a weekly fair value gap sitting just below. right? Discount. So let's go ahead and annotate that as well. Value gap. I need to just make these for the different time frames, but we'll go ahead and unlock that. So we could see the Magnificent Seven ETF get down to somewhere between $42.60 and $42.30 before heading back up. I mean, we do have a weekly volume imbalance that we could come down and get better discount. I'm not sure if we'll actually head down that lower for the Magnificent 7 ETF. All right, guys, so this is going to conclude my weekly / daily analysis update. I hope this helps you guys, helps you to frame your trades. Be careful, helps you to frame your investments as well. And listen, we don't have to, if you're doing long-term investing, you do not want to try to time the market. You want to have time in the market. So therefore, that's why I preach and teach that for you to dollar cost average on your bearish weeks and bearish days. Pick one or the other, or do them both, but just dollar cost average. Don't try to time and call a bottom or anything like that. But with all that being said, guys, I wish great health and wealth for you all, and safe trading and investing as well. All right, guys, until next time, I'll talk to you later. Bye.